guess thank you for showing up right after lunch. Let's do a quick show of hands. Who's been to the UAE in the last 12 months? If you just want to raise your hand. All right. Okay. Maybe a third. The good answers on stage. Exactly. Cool. Today we're going to unpack UAE European collaboration in the space. It's a partnership powering real-world adoption. Actually, really excited to kick off festivities here. So I'm Neil. Most relevant to this panel, I actually lived in the Middle East for about 15 years growing up as a kid. I've been going back for about 30 plus years at this point. Invested hundreds of millions of dollars in both Europe and the Middle East over the last several years as well. So with me are two really good friends and experts on the topic. I don't know, let the two of them introduce themselves.
Hi everyone, Baskari, co-founder and CEO of MidChains. We are an institutional OTC desk operating in Abu Dhabi and Dubai. We've been in the space since 2018, and we're one of the few firms that's actually backed on the equity side by two sovereign wealth funds, so Mubadala and Lunate.
Hi everyone, this is Mikel Ayala. I'm the regional head for Backpack in Europe. Backpack is basically three things as of today. On the one side, fully compliant centralized exchange. On the other side, multi-chain non-custodial wallet, and it's also the project behind MadLads, which is the top NFT community on Solana. We are a fully compliant exchange, got regulated by VARA in Dubai back in 2023, and now have entered the European market with the acquisition of a MiFID II license entity here. Basically been working full-time in crypto for the last 6-7 years or so, and the last 15 years working in finance.
Awesome. Well, we have a lot to get through, and it's a pretty short 20-minute panel, so let's dive right in. MidChains thrives with UAE's fiat flow advantages. What makes UAE European collaboration click in practice today, Basil?
So the easy low-hanging fruit there is actually euro-denominated trades. So that we've actually seen growth in euro trades, especially in the last year, since a lot of companies have started to move or set up offices in the UAE. Effectively doing cross-border remittance intercompany for a lot of corporate balance sheets has become a fast-growing segment of customers who we serve. And it's been interesting to see and optimize flows not only on the crypto side, but also on the fiat on and off ramping for access to the crypto market. So that's been interesting to observe.
Awesome. And Mikel, I know we talked a little bit before about this. You know, Backpack is really trying to be fully compliant globally, but it's not really about global passporting, is it? It's really about playing to local nuances. You know, why is local nuance the key to success in how you roll out Backpack?
Yeah, I mean, so taking a step back, I think it's very important to understand the world we live in. We basically live in a world today where there are like two dominant countries, like US and China, who are competing with each other for both industrial and economic dominance. And in such a context, I think there is a need for, let's say, neutral third parties that enable the collaboration between them. And not only on the physical world, but also on the digital world, because of, like, as a consequence of this competition between the two superpowers, basically there are two blocks that are being structured. I think in that context, obviously the European Union on the one side and UAE have to play a very significant role as these neutral states that can provide the economic flows and cooperation between these two regions. No? And in the same way as Bitcoin and Ethereum and Solana and neutral blockchains can do. Having said that, and thinking of us as a financial institution, eventually you have to understand that finance is very, very local. Access to services, taxes, accounting standards, even things as culture, as mindset, as language are extremely local. No? So you have to understand that wealth as of today is off-chain. If you want to bring that wealth on-chain, you definitely have to interact with the traditional financial system, and that system is extremely local. There are tons of tiny details that you have to take into account in all those fronts, basically to be able to serve each and every one of those jurisdictions. Unfortunately, there is no like this single value proposition or this single approach that you can plug in to different regions. Reality is very complex, and you have to account for that.
Awesome. And actually, on that note, question to both of you. So, I mean, regulators, when we're sitting here in 2025, regulators are our friends. I've actually been saying this for years as well, and I think we probably all have up here on stage in private and public circles. How are the local regulators really helping both of you, or each of you, I should say, with product rollouts and broader adoption in the respective geographies, UAE and Europe?
I'm going to spend a bit of time talking about the regulatory landscape in the UAE because it's a bit more complex than most people realize. There's the Virtual Asset Regulatory Authority in Dubai, who we operate our OTC business under. There's the Abu Dhabi Global Markets, who have their own independent framework on a state level. And there is also the central bank that provides a federal view on regulation in the UAE that governs activities like banking and payments, but not necessarily, for example, trading and investments, which is slightly different. So, as you know, we started our journey with ADGM. We had one of the first licensed exchanges and custodians in that jurisdiction. Product rollout at that early stage, let's say between 2018 to 2022, was a much harsher negotiation with the regulator. It was much more educational from the perspective of having them understand that, in fact, these products were acceptable for certain investors to be able to access. And so that was a interesting journey to see them go from, okay, we want to be told what does the market want and why is it safe, to they come around and propose to us, what do you think of this product, what do you think of that product, to now, which is our operating framework with VARA, where effectively we agree a framework. And so long as we have products that fit within that framework, we can offer them in a compliant way to our clients, be those high net worth individuals or institutions that are either investing or using the assets for payments. So I think the space has evolved a lot. And I think, also not many firms can say that have actually sold a license, which we did earlier this year. So that was an interesting experience. The regulators were also very supportive of a clean transition to the new owner for that particular license that we had sold earlier in the year. And so that tells you that the maturity on thought for how our sector gets to be regulated has improved tremendously, at least in the UAE. We've seen Mika come up as well. And although I don't have too much experience in it, I'm sure Michael does and can explain it much better than I could.
Yeah, I mean, so I think regulating crypto and regulating digital assets is extremely complex. Eventually, it happens as with any technological innovation. You basically have all the frameworks that do not fit the new reality. When you look at digital assets, it's like they are, but they are not commodities. They are, but they are not equity-like or debt-like instruments. They are, but are not exactly securities. No? So I think the good thing about both Europe and the UAE is that regulators have been forward-thinking and have been able to develop specific frameworks for those and provide clarity in terms of legal status, in terms of tax status, in terms of customer protection and so on for those assets. No, specifically in the case of Europe, and one of the issues that we have here is that there is not yet such a thing as a single market. We do have a European regulation for digital assets that covers spot trading and fiat on-ramps, which is being applied in the different countries with a slight nuance. And we have MiFID II, which is basically the regulation that applies to other financial instruments such as derivatives and so on. No? Good thing, as I said, is that there's a framework. There's clarity around like the type of things that you can do and cannot do. There's clarity about the things that you can communicate. There are things about the products that you can offer and all of that. The nuance is that there is no such a thing as a global regulation. There are a lot of jurisdictions, there are a lot of different countries, there are a lot of regulatory entities, and depending on the type of product that you have, the type of business that you have, the type of customer that you want to serve, you will have to get in a lot of nuance and a lot of details in each of the countries. No? But at least you have that starting point of, okay, something that is written in stone around like how to deal with digital assets.
Fascinating. And kudos, Basil. I don't know too many regulated entities that have actually sold a license over time, because you, I guess, have coverage elsewhere. Let's switch gears a little bit. Let's talk a little bit about market maturity, and maybe Mikel, I'll give you the first question here. Retail, compliance ops, these are core for Backpack. What's been the reality so far of scaling to retail in UAE versus Europe? Have you seen differences? Has it
Yep.
been largely the same with different efforts? We'd love to get your perspectives.
I think the two key difference between trying to scale a business in Europe versus UAE, it's, I would say, market fragmentation and density. Like Europe is home to more than 40 different countries. It's home to people speaking more than 200 different regional languages. And obviously, there is no single message that you can give to all that audience that scales in the whole region. No? You have to account for all that fragmentation. And also the other key issue of the European ecosystem is the little density. Like in the UAE, you have two big hubs. And in those hubs, you have great talent density, partner density, customer density. In Spain and in a whole of Europe, you have tens of cities where you have sizable networks, but it's extremely difficult to tap all of them at the same time. No? So you have to deal with that complexity, travel much more, try to be much more present in much more places, and that's probably the hardest part.
Awesome. And I guess we're all sitting here in Europe, so maybe let's learn a little bit more about the UAE for a second. Basil, institutional demand has been absolutely surging, right? For you with sovereigns, family offices, I don't want to say VCs, but everybody in the ecosystem, even corporates. Where is the strongest momentum at the moment? How are fiat rails enabling this? Who are you partnering with? Just give us some insight into that.
I think it's always interesting to look at the trend for the last couple of years. Initially, we would see most institutional deal flow coming from asset managers of different types. Now, those could be family offices, they could be high net worth individuals, investment companies of different types, whether VCs or sovereigns or whatever. But the main purpose of entering crypto was investment, essentially. And to put it simply, what we've seen evolve in the last couple of years are two things. One is the migration of companies from specifically Europe and East Asia to the UAE that are opening local operations and scaling those local operations with partners like us who've been on the ground for some time. Fiat flows are a big part of enabling corporates to enter the space. And so having access to multiple currency bank accounts for transactions has enabled this. We've observed dollar and euro transactions actually scale down and local AED or dirham transactions scale up. And I think that's a function of those firms having kind of moved across border. The last and probably most important sector of institutional adoption we are seeing are non-investment companies. So corporate balance sheets for treasury purposes using mostly stable coins to effectively do cross-border payments. I know Tether is not as popular in Europe as it once was, but it's still extremely popular in the UAE. And we do a lot of trading volume essentially on and off ramping into stable coins for corporates that demand it, whether it be for a purpose of commodity trading or spot commodity trading or e-commerce or any number of real estate development projects. There's lots of things that are essentially accepting crypto as a method of value transfer and payment. And so I'd say that's definitely the fastest growing segment and probably what forms the biggest bulk of our daily trading volume today.
Fantastic. And actually, similar question to you, Mikel. On-ramps are driving so much of flow, and I'm personally and professionally as my company customers of Backpack, right? So, how are your corporate relationships really growing in this market? What are your banking relationships like as well as you think about, being in many places all at once?
It's extremely important. Like, as I said, the fact is that the wealth as of today is off-chain. Banking relationships are the bridge of traditional wealth to on-chain wealth. And basically your ability to provide regulated services in each of the jurisdictions in which you operate, having the ability to have banking partnerships in each of the jurisdictions in which you operate, define how good or how bad your breach is and your ability to bring capital from the traditional financial system to the on-chain world. So for us, it's a critical part of our strategy, getting regulated, having the right banking partnerships. And that's what we do. Let's say currency by currency, market by market, bank by bank.
Awesome. So a few minutes left to go here. Let's switch gears one last time. Let's talk about ecosystem growth. So Basil and I were previously speaking before this panel. You're giving some great examples about how land is being tokenized. You know, there's a handful of partners coming into the ecosystem that are just using the technology, using the rails, using the adoption, and furthering adoption through that. I guess, what makes tokenization a game changer, perhaps? Maybe that's a good first question to start with.
I think that this is an extremely kind of UAE biased, positive, I would say, news in the sense that the space we've all been talking about, sort of RWA tokenization or security tokenization or different assets to be essentially put on the blockchain and recognized for legal ownership transfer. What the challenge that has always kind of existed for adoption of such products is a legal framework which recognizes that the owner of the token actually does own legally the underlying asset. And so I still haven't seen that in a lot of countries in the world where people are talking about, you know, RWA tokenization, which I think with today's products is pretty straightforward. But what still isn't straightforward is essentially getting that sign off. Where I think we've seen a huge bit of innovation legally in the UAE is in twofold. One, which is now in practice, is the Dubai Land Department has actually issued specific licenses to tokenize property title deeds. And so today, there's been about 10 billion of transaction volume in notional US dollars of title deeds being traded as tokens in Dubai for essentially real estate investments or fractional real estate investments, which is incredible. The fun fact is that Dubai real estate has actually outperformed Bitcoin, even though I'm more of a Bitcoin person, but still, it's a fact. The other thing which is super interesting is we've been granted actually one of the first licenses, and we will go live at the end of the year, to legally offer private market securities. So essentially tokenization of private essentially companies, either on the equity or on the debt side, and to offer that as a token investment. So that's exciting from our perspective, considering that the Securities and Commodities Authority of the UAE do recognize this now as a viable product, and essentially the investors of those products can be protected. And I think that's kind of the core of what we've been trying to figure out how to bridge in terms of getting the products adopted. Now, is something that is recognized in the UAE going to equally be recognized elsewhere? Probably not, because regulatory is highly localized and kind of complex. But at least if you're an investor in one of these products and your investment is held in the UAE, that it is legitimate and it can be enforced if something goes wrong, for example, which is really important for institutional adoption, which is the area we focus on.
Actually, that's really nice because it's a fantastic segue to actually talk a little bit about Mikel and Backpack. I think you guys have just, maybe yesterday, announced a new tokenized stock partnership. So tokenization is taking place in other parts of the world, but it is slower to adopt. I think the regulatory landscape has been very friendly in the UAE for this for many, many good reasons. But Mikel, I know beyond tokenized equities, you've been broadening your offering, tokens, derivatives, stocks, and a handful of other things. We'd love to talk a little bit about how you're bringing those products to an increasingly adopted crypto user base.
Yeah, eventually, the way we think about ourselves is like a player that is trying to make the market infrastructure more mature. Eventually, a market is an information system. It allows all the market participants to express their views around how things are going to evolve. And the more mature a market is, the more nuanced are the views that market participants can provide. Now, if you think of crypto markets 5-10 years ago, basically they were spot only for a few assets. So the only opinion that a market participant could express was basically, I'm out of the market or I'm up only. No? Obviously, if to the market you also provide derivatives like perpetual futures, if you provide market participants the ability to borrow and lend an asset, if you provide market participants the ability to use an asset as collateral, if you provide them the ability to use not only crypto and stable coins, but also fiat on stocks and other financial instruments as an asset to be traded, you have a much more mature market. Basically, a market where you can express your opinions around spot prices, around future prices, around how funding rates are going to evolve, around how interest rates are going to evolve, around how like exchange rates between different assets and asset classes are going to evolve, and so on. No, and that's basically what we are working on. We think, and that's part of our long-term vision, that a financial instrument that is on chain is better than a financial instrument that is living in the systems of the traditional financial system, like a stock that you can trade 24/7, that is transferable 24/7, that can be used as collateral anywhere in the world and any venue 24/7, is a better stock than one listed on a traditional market. No? And all the work that we are doing to both leverage the technology of blockchains and regulate ourselves, be compliant, have on-ramps, have the ability to list registered, SEC-approved, SEC-approved assets as stocks is part of that strategy. You know? So yesterday, we announced that we are about to list issuer-led stocks, or real stocks with the same identifier than the ones that I have in New York Stock Exchange, NASDAQ, that have all the benefits of tokenization and blockchain technology, which is basically the ability to transfer them anytime, trade them anytime, use them as collateral anytime.
Fantastic. Well, I guess there we have it. A short 20-minute panel, but a lot of insights about UAE European collaboration. Founders chase those partnerships. Investors back these ecosystems. Thank you, Mikel, Basil. Pleasure. Thank you all for listening. Give it up to our panelists.